Hey everyone, Dan here. We are just after market close on Tuesday, June 29th. We're going to take our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to comment below with your thoughts, ideas, questions. It helps everyone and I appreciate it. All right, so SoFi, I was I was loading up the chart and I was thinking, oh, SoFi's had a great day. And then I thought people are going to believe that that sounds weird, but I'll sort of talk about why in a minute. But the volume at nearly 55 million, we're starting to drag up that average 3-month volume from under 5 million just a couple of days ago to now ringing in at 5.7 million. So we'll look for that to continue to uptick as interest and volume continues to pour in to SoFi. It does have the previous close at 19.26, so it's down about almost 40 cents on the day, and but I actually think that it's it was a really good day, and I'll kind of explain why. So if we get this out of the way, it came up in the pre-markets. And yesterday we had charted this white zone as sort of like an important zone for it to get through in order to truly break out of. And it did that. I had sent that out in the video right around this time frame, around the noon hour. And, as it sort of like established through that white area that we had put in the chart at that time, just a few hours later, it was able to make this big push up toward 20 and then did a good job in the after hours and the pre-market. That said, it did leave this big gap here, and we'll talk about that in a minute. As is often a theme during these videos, I apologize if you hear a bunch of screaming in the background. I have small children and do the best that I can to filter it out in the editing process and to position myself in a space that it won't be an issue, but you just can't predict these things. Anyway, worked itself over the gap and established on 20, which we had said previously would be a really strong bounce zone, and it did push nicely off of there, stretching nearly to 21, and then it did free fall quite a bit throughout the day, but here's what I like. It fell rapidly through that 20. Table that for now. It then came down and tried to establish support at that 19.25. And as it couldn't hold it, it bounced not in that white zone. I mean, it was in the white zone, but more importantly, it bounced right off of that 1872 price target, which has been charted for a long time because, as you can see, this chart existed when it was in this channel. It existed when this selling pressure from shorts came in. This was on June 2nd. It was in existence during the run up here. So this one has been holding true for at least a month. And so it's good to see that it's continuing to do so as the price fluctuates quite a bit from relatively recent highs and lows. So to me, as I was watching the price action today, my thought was, because obviously I saw this run up, my thought was if it does start to come down, if there is a dip buying into price strength version of today, which if you haven't seen that in my videos, all that means is the price is moving up and then you look for it to come down to the appropriate support level and bounce. And that's where you buy it, on that bounce. But overall, the price is moving in generally a bullish direction. I thought this 1872 was the appropriate level for it to come down to if we were going to get a dip buy into price strength today. And that's exactly what we see now. I will acknowledge it's a little bit of a cheater moment because we also got timed out, right? Like the bell rung and the day ended. So if this had gone on for another 5 hours with pure, and I know there's after hours, but I'm saying with full volume of a trading day, the question is would it actually bounce there? But as I was looking to take another position today on dip buying into price strength, that was my target. And it's mostly because as it had this big run up, you see it blew through 1872 after it had tested it once, okay? And then it blew through the 1925 and came back and tested it again to establish off of it. and then so on and so forth. But the initial thing was that it blew through this 1872 and never came back down to test it. I always look for it to come back down and test that area as like a confirmation that it is leaving the zone, most likely. If it's caught in some weird consolidation period after that, then it might continue to test the zone. But to me, that signifies a stronger possibility that it's going to continue on its bullish path. But because that didn't happen here, that's why I thought today the right place for this to come down and test is that 1872. And it doesn't put it in jeopardy of coming all the way down to the 1807, which would essentially be losing all of that bullish run yesterday and in the after hours and the pre-market today. So as it was coming down under this 1925, I put in an order for a fresh buy. It was a pretty aggressive move because I didn't know whether or not it would bounce or not off that 1872, but I was willing to kind of take the risk. And so you can see over here at just before power hour, I took another SoFi position. It's a LEAP contract, so it's a long dated options contract. Expires January 20th of 2023. I'm reading that correctly. Yes, January 20th, 2023. At the $20 mark. So betting that SoFi come January 20th, 2023 will be over $28.65. This was an $865 contract. If you guys are interested in some options videos, like how to read options, how to play options, I could do a series on it. I don't want to do it if it's just kind of like going into oblivion or going into nowhere, like no one's interested or there's already enough of that out there on the internet. But you tell me if options would be something that would be interesting for me to do a playlist on, aka like a mini course. I'd be happy to do it, put it together and release it out, but you let me know if there's any interest, and if not, no worries. But that's what I picked up there and why. And so, it did continue to dip a little bit after picking it up, but I don't ever look to buy only at true bottom, right? Like the insanity that some people get in their head of, if I buy it on a dip and it dips any further, I failed. And also, if I sell it on an upswing and it continues to go up, I've failed. That is so misguided. Locking in profit, taking smart positions because you have indications that it's the probability of this being a profitable trade for you seems to be in your favor. Those are the smart ways to play. You will catch a portion of the move. And what you want to do is catch a portion of the move most of the time. And if you can do that and make smart entries, you will be in this game for a very long time. But the idea that you are going to exactly sell out at 20.98 when that wick shot up here this morning, and if you didn't, and you sold here at 20.35, you failed. You got to get that out of your head. Your aim is to catch a decent portion of the move most of the time, because I say most of the time because the other times you'll be wrong, right? The move will go totally against you. So anyway, off of that. So what I'm looking for in the coming days, obviously, let me zoom out here a little bit, is for it to start to work itself into some sort of channel like it was establishing here. And obviously that didn't flesh out at all. And that was really just the after hours in the pre-market, obviously. But I want to see it be able to have these like channel gains that sustain and flesh out and test the upper and lower bounds of the channel. Now, just because I want it doesn't mean that it's going to happen at all. So if we keep this sort of like two-dimensional view of things with just the price targets, what I'm going to be looking for it to do is start to test that 1925, either in the pre-market or very close to open tomorrow, and start trying to flip that from resistance to support and then make a pretty quick run to 20. I think if we can get support at 20 tomorrow, there'll likely be some low volume things that happen in the midday, so it could fluctuate a bit. But I think that if relatively early on in the day, say before the lunch hour or so, we can get support at that $20, I think that there's a good chance that toward the end of the day we continue making a run and maybe try to test out that 21 again. There might be a lot to ask, for a day, but that's what I'm going to look for. But it all is going to start with if it can flip 1925 from resistance to support. Okay. Well, I guess I should mention, to not sort of like cloud anyone's view, if it does come down further, I'm going to look for it to hug that 1872 pretty solidly. If we want to look at where the ATR is now, it's at 18 cents. So 18 cents below that 1872, I would still consider it being on 1872, being able potentially to really quickly regain support there. If it does fall below, then yeah, I mean, we have additional catch zones below. I'll kind of make my decisions accordingly in terms of like if they seem like valuable, potentially profitable, good risk to reward ratio opportunities to take positions. So it's going to be sort of like a game time decision if it's dropping tomorrow. Obviously, everyone's a lot happier if it's running, right? So, okay, so that's what I'm going to look for on that side of things. RSI right now, just to sort of finish it off with RSI and the MACD, sitting just below the mid-range, so definitely a ton of opportunity for it to go ahead and come back in. It did do like a double-ish dip into the oversold today and just came up about mid-range. So I know I talk a lot about things double dipping into overbought and coming down to the mid-range in between and playing that move, but the same thing happens on the downside. So what I would hope is it's double dipped with its mid-range. Now I want to see the RSI get up to about 60, 65, and we'll sort of like be out of that immediate kind of continuously dipping into oversold territory kind of situation. On the MACD side of things, bullish crossover in negative territory could be a nice bullish crossover. It's not like the steepest one I've ever seen. Obviously, like this one was steeper, but it's not a really lazy one either, because if you look where it came from, it came down, it caught itself, and it was like a point, right? It's like coming to a very fine point there, and then it shot up, crossed itself over the signal line, which also started to creep up. So this could be a good indication that this could be a good run, plenty of run room, since it's starting down so low underneath the baseline. All right, before we switch over and take a look at the data, there's two pieces of data we're going to look at. We're going to look at the short data just to kind of get updated, squared away on that. So that'll be relatively quick. And then we're going to look at the options data and gamma squeeze potential for SoFi as it could unfold in the weeks to come. Before we hop over there, there's a few things that I want to talk about. These descriptions are in the link below. Sorry, these links are in the description below. One is I'm planning to roll out a newsletter. I decided I'm going to wait for like 100 folks to slap their email into that Google form before I'm going to like start to build it. So even when that happens and I start to build it, it's probably about a month into the future. Right now we're about halfway to 100. So if you're interested in potentially receiving once or twice a week a newsletter from me with additional trade ideas, opportunities as I see them, just sort of like risk management for stocks that we're commonly tracking, that'll give me the opportunity to put more stuff there than I can realistically cover in 20 videos in a week. So do that if you're interested. And then also there's two brokers listed below. Both are free brokers. The quick and dirty of it is Gatsby is a super sleek modern UI, modern UX. I think they're only a mobile app, so I don't think you do anything on the web or desktop. And I like them for knowing what it is I'm going in to buy and execute on and doing a really quick, easy trade. Free broker. Webull is the other one. That's the charting software that I'm using. That's what you're seeing on the screen. That's a bit like much more involved. You can do your charting. You can set a bunch of complex sell and buy orders and things like that, take profits and stop losses and options contracts and all that jazz. Also a free broker. Also think that they're great. So those are in the description below. Let's hop over to some of the data. So last night we saw shorts peeling off of SoFi as we see what happened yesterday with this huge run up. That could be partially triggered by the Wall Street Bets crowd jumping in. That could be partially triggered by institutions jumping in. Could be partially aided by relatively high short volume in the previous days. relenting and maybe closing out some positions. That's not to say yesterday was a short squeeze. I don't think it was, but that thing would aid in keeping the shorts away, at least for the time being. We'll see if they tended to come back in today when they saw this big run up and this new test of 21. I could see that drawing in, IPOE and now SoFi, in my opinion, has been for a long time and still is a strong something that shorts have their eye on strongly. I'll say it that way. Good news, our friends at iBorrowDesk have the interactive brokers feed back up and running for SoFi. This is down for a few days, which you'll see in a minute, but it worked like a charm today. And 620, so we had this lag from 624 and then it went down and it came back today on 629. Interestingly enough, the fee only continued to like stick around or even go up from its previous range. My biggest concern was that fee was coming way down, even though a bunch of shorts had closed out their positions. Now, I don't know exactly what that closing out looked like between this 45K and the 1.3 million. But, if we sort of indicate it back to here, this was 624, super high day in terms of short volume ratio. And then it's trickled down, and now it's nice. It hasn't seen like the mid-teens for a long time. I mean, this is in the teens, but it's almost 20, so mid-teens. I mean, I'm trying to even think back to IPOE. It's been a very long time, I think, but now some shorts seem to be shying away at the moment. I don't know if it's just a wait and pounce kind of situation. My hope would be maybe they're going to stay away for a while because there's some strength coming into the market, but also that this fee is just remaining so high that there's just plenty of other opportunity out there for stocks to shorts that they're not going to incur that big fee. All right, so we're going to flip over to the Gamma Squeeze side of things. I'm going to take a quick sip of water. And let's first just talk about a couple of things. So Gamma Squeeze has to do with options contracts and what happens when options are made available and or when somebody buys one, like I did earlier today in SoFi. So open interest is what we're mostly going to be looking at. Open interest indicates the total number of option contracts that are currently out there. These are the contracts that have not been traded, that have been traded, but not yet liquidated by an offsetting trade. So those are the important things that we want to be paying attention to, the open interest. And then the other one is when options have that's not the one, exceeds, this is this one. When the volume exceeds the existing open interest on a given day, it suggests that trading in that option was exceptionally high that day. All right, so keep those things in mind. And then also, open interest is the number of options that exist for a stock and include options that were opened in days prior. A high number of open interest means that investors are interested in that stock for that particular strike price and expiration date. Okay, so let's take a look at SoFi's option chain. This is for Friday. These contracts expire on Friday. And if you're not familiar with all the options lingo and jargon and stuff, maybe just hold tight. Let me talk through what this is. And then A, you can drop a comment below and say, hey, if you did a video just on option stuff, it would be helpful. Or B, after you watch this video, go seek out some existing videos, get sort of like your head wrapped around how options work, and then finish this video off or come back and watch it again. But anyway, we see here volume and open interest, okay? We see volume outpacing the open interest in big ways at the 15 and at the $10 mark. The round-ish numbers, like by 5s or by 2s or what have you, often tend to be more popular. And then we see also big open interest up here at the $18 mark, and then all the way through the $20 mark for sure. And then even, really solid up into the 22s and then again at 25. So you see these nice round numbers, 30. These have really high levels of open interest, I guess just because the number jumps out to people. But anyway, these are the number of open contracts that, so for example, if SoFi can close above $20 by end of day Friday, then this will put all of these contracts in the money and they can be executed. And so if that's the case, then you're in a position where if anyone who has sold these calls has sold a naked call, which definitely happens, they then have to go buy 100 shares or more, at least 100 shares a contract, for those options that are now being executed, and exercised. I keep saying executed. I'm like, that sounds wrong. Exercised. It's very hot here today, and I feel like it's giving me all the woozies. But anyway, as these strikes become in the money, and if they end up closing out and expire in the money, then because they can be called away, anyone who naked sold those calls or naked underwrote those calls would have to go buy 100 per contract, thus, of course, pushing the stock price higher. And then also, the higher the price goes, the more these stocks options contracts are made available at higher strikes. So 35 strike is the highest for this one, but future dates go into the 50s. And, so the extent to which market makers underwrite this and sell you the $35 call option, they then make themselves neutral, meaning they're not bullish or bearish, slash hedging their position by purchasing some number of SoFi shares in order to not lose a major position if that call goes into the money, lose a major amount of capital, I should say. So that's what I'm going to be looking for, namely is this $20 strike expiring in the money would be really interesting if that can happen by Friday. And I think that that's probably like enough to ask. Yes, everything above that is like additional gravy, but even this would be a huge potential win. And then here's just another way to represent it. You can see here the big volume and open interest that exists as a visual on 20, and then all surrounding areas. The other thing to kind of bear in mind is the Max Pain. The degree to which this theory is correct or not is questionable, but the idea is that sometimes players will try to push a stock to a certain price on Fridays so that the most contracts expire out of the money, completely worthless, and they just keep the premium for having sold them. Max Pain this Friday is $20. So interestingly enough, this puts it in a position where I honestly think the Max Pain, the degree to which the theory of Max Pain is true, and it happens to play a role in where the price ends up this Friday, I think that if it does that, it would actually be a really good thing for SoFi. So we'll see if it can be pushed to 20 and we get those, additional, at this point at least, 10K plus call options expiring in the money and being exercised. The other thing that I wanted to show here is just sort of like the gamma squeeze. This is an article talking about why you should be afraid of gamma squeeze, how that's the real squeeze to be sort of like on the lookout for. And basically it's just saying, what we had talked about before. A short squeeze can do a certain amount of things, but a gamma squeeze can come in with options being so accessible to retail traders these days, and a lot of stocks having weekly options contracts as opposed to quarterly, that puts a lot of additional pressure on market makers potentially to hedge their underwritten calls that they've sold and buy up the stock, pushing the stock price higher, theoretically then closer to the strike price of the option that they just sold. So interesting article here. If you have a chance to look at that one, it's on The Street, called Why You Should Be Afraid of Gamma Squeeze. All right, well, that'll do it for this one. I'll continue to monitor SoFi, obviously, and do the daily updates on it. I didn't know this was going to stretch so long, but if you've made it this far, thank you. I appreciate it. Feel free to share this on Reddit, Twitter, Facebook, what have you. It means a lot. Okay, I got to go get into some AC. I will see you in the next video.